Nothing is more definite than death and taxes. Hi, I'm Justin Hitt with Sustainable Wealth Secrets. The misgivings of a country, the mistakes and the financial obligations of the country you live in are reflected in both inflation and taxes. It is entirely possible for your fortune, however big or small, to be quickly drawn away from you through tax decisions. Did you know that the Internal Revenue Service of the United States of America has received funding for 80,000 agents? That's a lot of folks, especially when less than 45% of Americans actually pay any taxes. They don't have any legal obligation. 51% or more have no legal obligation to pay taxes. Many of them don't pay taxes because of their citizenship status. Many folks don't pay taxes because they pay taxes to some other agency outside the United States. There is a tiny portion of the country who doesn't legally pay taxes. If you spread over these 80,000 agents on them, I guarantee that the middle class will be paying more in taxes. Not necessarily because tax rates have increased, but because the IRS agents will find something to fine you for. And I don't know if you're aware of this, but in the United States, the fines and fees, and I've got a lot of personal experience with this, unfortunately, the fines and fees on taxes are tremendous. If the government fines you, the IRS fines you a fee, you will pay interest on that fee, 6, 7, 8% on that fee. If you don't have a solid CPA, tax advisor, or attorney, you will pay more taxes than you're legally obligated to pay. In no means have I ever advocated you paying less tax than you are required to pay by the government. Because again, taxes pay for the common good. Taxes do fund our government, and ultimately taxes are believed to be necessary, but I would argue that a low tax government will actually collect more in taxes. Raising the taxes and then sending out goons to collect is not going to collect as much money as people think it will collect. I know politicians are telling you a lot, but there are governments who fund large common good projects through bonds, through use taxes such as tolls or fees. The whole European economy is built on a value-added tax where you actually pay taxes on the consumption of goods and services. And there are governments today that have flat taxes of as low as 12% that found they collected significantly more in revenue than they did when they had a graduated tax system. But again, I'm not arguing about whether or not the tax system is fair. I agree, and I encourage you to pay your taxes. However, the structure of your endeavor, whether you're an employee, whether you own a company, whether you work gigs as an independent contractor, all of that matters. Whether you have tax write-offs, operating a farm, have real estate investments, all these other things, if you qualify, are ways to reduce your tax obligation. There have been years where I've paid as much as 51% of my gross income in state, local, and federal taxes. I know a lot of folks talk about federal tax only, but you have state and local taxes. You have fines and fees. You have also property taxes inside of a business, property taxes as an individual. You have different tax through the form of licensing. All of these things matter. And so you want to make sure you're tracking your tax obligations correctly in your accounting system, and that you're working with a qualified professional to reduce your legal tax obligation. I'm not talking about offshoring. I'm not talking about anything, but the U.S. IRS tax rules are so complex that the typical individual who has expertise in one area won't necessarily have expertise in the area of tax liability. And again, that's why you invest in the fees and the cost it is to work with a qualified professional. It could cost you $200 to do a tax return. It could cost you $2,000 to do a tax return. The basis of sustainable wealth is knowing how to calculate and determine which is worth your time and effort. Now, you could just pay the government what they ask for and then charge that to your customers, because again, wealthy people don't pay taxes. Where did the money come from? The money came from serving the public. It came from delivering value in the marketplace. And by the way, a wealthy person could have as little as $5 million in the bank as far as net worth is concerned. See, it's not about the money you earn. It's about the money you're able to keep and to keep working for you. The residual off $5 million would make a lot of people comfortable. But how do you get to that place? Well, first you get there by paying the legal minimum in taxes by understanding, working with expertise, and filing your tax returns. I tell you right up front, there's so much stuff going on that at times it is difficult for me to get my taxes in correctly. So I want to make sure that I'm doing taxes on a quarterly basis. Whether or not I need to file a return will be determined by my CPA. But ultimately, without these resources, you will break rules you didn't know existed. Did you know taxes are to be paid on barter transactions? Did you know that if you own a business, the property in the business likely pays personal property taxes in the state or in the locality that you're operating that business? Did you know that where you incorporate your business matters as far as state, federal, and even local taxes? And did you know that licensing might make requirements of tax obligation in jurisdictions you didn't even know? Now, you don't have to be Amazon to have these problems. But if you work across state lines, if you have a business in multiple jurisdictions, you could be an employee working for a California company remotely located and pay taxes in California and in the state where you're located. Again, folks, I'm stressing that the tax system is significantly complex for a reason, and that's why you want to work with professionals. Now, Frederic Bassant, a French economist, writer, and a member of the French liberal school, he says, when plunder becomes a way of life for a group of men in society, over the course of time, they create for themselves a legal system that authorizes it and a moral code that glorifies it. Think about this. Making the rich pay their fair share. When you ask the question, who is rich, you very often hear that if they have incomes of $250,000 or more and a net worth of $500,000 or more, they're considered the rich who so-called don't pay their fair share. Well, if you look at the math, that is the typical business owner who this year might be making $250,000 a year, but might have gone a numerous number of years making nothing. They had reinvested in their business, and now their business is finally taking hold, and they're making $250,000 a year. Now, this is their gross earnings. They're paying for their own health insurance out of pocket. They're filling up retirement accounts that had no contributions for years, and they're ultimately employing hundreds of people in many cases. Now, some of these rich people are retirees who have taken a lump sum retirement and reinvested that so that they can get some kind of residual income while they're retired. So today they've got $1 million net worth. And they've invested that $1 million net worth so they can get about a $40,000 a year income, but they're considered rich because they've got this $1 million net worth. Now, many people outlive their retirement because $1 million today isn't the same $1 million in the 1980s or the 1970s. That $1 million today, with inflation, with taxes, with all that's going on, actually reduces your buying power so that you really need $2 million. You really need $3 million. You really need $5 million. Now, what's worse is, depending on the tax structure, if you have a consumption tax, as an older individual on a fixed income, you might actually be paying way more in taxes than someone who has regular income. Somebody who is an employee has a different tax obligation than somebody who has a business. You can't send the bill to your employer if taxes go up and your only source of income is your employment income. Now, as a business owner, depending on what market you're in, you can pass along increased taxes to your customers. Essentially, every dollar in a business came from a customer. And so, therefore, every tax dollar paid is a burden on that customer, not on the business. And there's many ways of looking at this, but you've got to understand is that when the government makes foolish decisions, when the government wastes time, money, and resources, they are going to bill you. They don't pay for that. When they say we're going to hire 80,000 more IRS agents, you are paying for them, and those agents are going to come looking for ways to reimburse their income and generate revenue to pay for policies and programs. This has been the way it has always been. You know, this Basant guy died in 1850. Okay? Hundreds of years ago, people understood that there's nothing that you can get away from death and taxes. The Bible talks about paying Caesar his due. Now, I'm encouraging you to put yourself in a situation where it doesn't matter what the tax is. Because in the United States, there was one time that really wealthy people paid 90% of their earnings into taxes. Now, there's times that through the voluntary tax of buying bonds, government bonds, that's what government is going to do a program. They raise a bond and people buy that bond. They're volunteering to pay a tax. But again, they have some kind of yield in return. You want to be investing your money in areas that generate cash flow. We always talk about buying assets that cash flow, but doing that in the context of the current tax climate. The best way to do that, again, is a CPA, tax attorney, and a lawyer. Now, that's 3 people you need to have on your payroll. So you must build those expenses into your income targets. See, this is where it gets complex. The wealthy do not evade taxes. They do not do anything illegal. They have so much to lose. So they hire the right professionals to help them structure, present, and report on their income in such a way that reduces their tax liability. I don't know if you're aware of opportunity zones. I've bought assets in opportunity zones. They have adjusted cost bases. There's depreciation. I own real estate. Other people I know own real estate. There are ways to legally serve the citizen, provide necessary services, and pay as little tax as possible. Now, these laws are written to reward those who stimulate the economy, to reward those who create jobs, to reward those who kind of follow the program. If you understand these laws, and a lot of CPAs will send out newsletters or they'll talk with you one-on-one about your unique situation. I'm not providing financial advice here. I'm simply making you aware of opportunities that are available to you. If you sit down with a qualified individual, you can help pay as little tax as possible. But again, the government, when they overreach, when the government spends too much money, they will send their people to get paid. That's the way it works. You can ignore the whole Obama situation where they were doing targeted audits and flip back 40 years ago. And there will be examples of taxes being collected or being created on individuals. And, you can call taxes anything from personal property tax. There's like 1,000 categories of taxes. My point being is the solution has always been the same. If you want to build wealth, if you want to pay as little tax as legally obligated, because I believe that you have a better knowledge of where your money should be applied, that you know better what your community needs, you know what charitable organizations are making a difference. You can make that decision better than a faceless, nameless government. And so in order to pay as little tax as possible, you need to hire the right professionals, CPA, tax attorney, and a lawyer. And before we wrap this up, I want to let you know that a CPA, if the IRS comes to them, will give information about your details, and the IRS will find a way to tax you more. A tax attorney is different, and a regular attorney is different. There are even communications obligations that these individuals have. Like an enrolled tax attorney is going to be different than just a regular lawyer. Those are the depths that we can go to in the membership program. If you have any questions about what I've covered here today, if you have any questions in general about how to build wealth and keep it, then you want to visit www.sustainablewealthsecrets.com. I'm Justin Hitt. I'm your guide here. I'm an analyst that goes out and finds this information both for myself and for my private clients. I have a background in risk management, so I'm always looking at how do we reduce your liabilities, in various categories of liabilities. And in general, the Sustainable Wealth Secrets newsletter is really about the applications that allow you to transform income into net worth. Thanks for listening.